Do you feel that? The market has a fever. Let's talk Bitcoin fever today on the weekly update.
Okay, let's talk Bitcoin fever. Here's what you need to know. First up, the newly created Bitcoin ETFs are proving very popular indeed. Here's some market watchers. Total spot Bitcoin ETF holdings has reached 281,000 Bitcoin. Remember, there will only ever be 21 million Bitcoin. So, quite a bit of them are being locked away right now. That's $14 billion. That's nearly 50% more Bitcoin than the total holdings of MicroStrategy. So that was the previous best way to get investment exposure to Bitcoin. BlackRock and Fidelity are leading the charge, 124,000 and 88,000 Bitcoin respectively. Daily flows consistently positive. New cohort of Bitcoin allocators has been unlocked. We're one of them. And the bullishness of these ETFs cannot be understated. That's his personal opinion. Here's another one talking about liquidity. IBIT, that's the BlackRock iShares Bitcoin beneficial ownership. This is what we actually use in our portfolios, has traded $1 billion worth of shares so far. It's a tremendous amount of liquidity. Ranks 11th among all ETFs, the top 0.3%, and top 25 among stocks. Insane number for a newbie ETF, and especially one with 10 competitors. $1 billion a day flowing into and out of this asset is a big boy level of volume, enough for even large institutional consideration. Both of these things are well ahead of schedule. I thought there was going to be some interest in Bitcoin. I would not have guessed there was going to be $14 billion worth of interest in the first month. I would not have guessed that a singular Bitcoin ETF is trading over $1 billion a day. This is more than just mom and pop investors. These are institutions taking a spot. And if you remember, we talked about these Bitcoin ETFs once before on the episode entitled Regulation Change. And one of the things I said was, liquidity is going to bring price. And this is a significant upgrade in the liquidity of Bitcoin. I mean, these are huge buyers that really couldn't have accessed the market before. So how is it going? Well, unsurprisingly, liquidity is bringing price. Bitcoin is currently $61,742 a coin, near its all-time highs, and you can see this sort of parabolic movement shortly after the approval of the ETFs. And really, this is what happens when you take a small, disconnected backwater of the financial system and you connect it to the mainline financial rails. It allows us to trade in Bitcoin in much larger sizes than the market could have supported before, and that's typically positive for price. And this is all happening at a pretty unique time for Bitcoin. Bitcoin is roughly around a month away from its reward halving. And typically, historically, a halving has been pretty positive for Bitcoin price. So if you don't know what a halving is, essentially the Bitcoin miners get paid to secure the Bitcoin network and they get paid in coins. However, every 4 years, the amount of Bitcoin that they receive as a reward gets cut in half. That's why we call it a halving. And historically, if you look, these halvings have been the pretext for some pretty exponential moves in Bitcoin. In 2012, the first halving happened at $12 a coin. In 2016, the second halving happened at around $650 a coin. That's a nice move. Mid-2020, we had the third halving, somewhere around $10,000 a coin, $650 to $10,000. Nice move. And then we're about a month away from the fourth halving that's going to happen, maybe somewhere around $61,000 a coin. Also a pretty good move. So we've got this situation where there's tremendous demand for Bitcoins coming from these new ETFs because large institutional dollars are flowing into them. And yet the supply of Bitcoin is about to be cut in half. Generally, your economics textbook will say that should be pretty positive for price. If I look at IBIT, so this is the specific ETF that we use in our growth portfolios to gain Bitcoin exposure, it's been a fantastic, stellar performer in a short amount of time. We've just recently doubled down on our exposure in IBIT because I think this is a trade that, potentially has some legs. Of course, there's tremendous amount of risks. Past performance isn't indicative of future results. These are only my opinions, all the stuff that, all the disclaimers, not financial advice, and all the rest of that. But I think it's pretty interesting seeing what's happening with this ETF. So what does it all mean? Well, the market's got Bitcoin fever. The Bitcoin ETFs have been very popular. Institutional interest and trading volumes have arrived ahead of schedule in these products. And all of this is happening in the backdrop of a particularly important time for Bitcoin, the halving. As a result of all of this, we've doubled our stake in IBIT in our growth portfolios. And the final piece, and this one, if you remember, just last week we did NVIDIA Madness as a temperature check. There seems to be a whole lot of fevers and manias going around. So this market seems frothy to me, and we want to be careful, right? We saw very similar setups in 2021. So there you go. That's the news review. Market's got Bitcoin fever. I'll see you for the weekend review.